right, guys, welcome back to another episode of Sky's the Limit podcast. I am your host, Mike Doherty, and today I have an awesome guest, Justin Sudol, who is the Director of Investor Relations at Alpha Capital Funds. They're a vertically integrated real estate investment firm based here in Connecticut, nice and local. In his role, he leads capital formation, investor communications, and strategic partnerships, connecting investors with off-market value-add multifamilies. I personally know Justin. He's a great guy. Justin joined Alpha in 2020, and he's been instrumental in scaling the firm's portfolio to over $75 million in assets under management and more than 500 units acquired. Very, very impressive resume and track record, and we're very lucky to have him today. So with that, Justin, welcome.
Mike, thank you for the introduction. I really appreciate that. I'm looking forward to, divulging in my story here into real estate and, trying to spread some awareness on, what we're doing and how we could all grow together, right? And learn a little bit of something.
Hell yeah. So a lot of our investors are just getting started, or a lot of our listeners are just getting started in real estate investing. So where did you start your career and how the hell did you get started in real estate investing?
Oh, great question. So I'll start a little bit behind before I even knew what a multifamily was or knew anything about real estate, really, right? I was working for a company, and essentially what I was doing was I was a sales rep, selling tools, essentially, right? I was going to different Home Depots and selling, Milwaukee brand, Ryobi brand tools, and going to different locations. And I was obviously looking for more. I always had an entrepreneurial mindset. And I knew that, I didn't want somewhere where I was going to be capped as far as my income and what I could do to scale up. I just didn't really know what that was, right? One of my great friends, Anthony Diamore, actually was just starting to work for Alpha Capital. And he was working on the acquisition side, working with, off-market, single family, multifamily, flip opportunities and whatnot. And while I was on my route one day in Hamden, he reached out and he's like, "Hey, listen, you should come in and check out what's going on here. I think you'd be, a great fit for, the sales aspect of it. You just got to learn the real estate." So I was like, "Sounds interesting. Let me pop in." And I eventually, I met with our CEO who's founded the company, Tyler Smith, and he's like, "Hey, listen, we're looking for more people. We have a lot of great, acquisition guys in-house, and we're looking for more disposition guys." And what that means is like connecting with, real estate investors who are looking for these value add opportunities where they can do fix and flips or buy and holds and whatnot. And he kind of gave me, a ballpark script and watched some videos on, what wholesaling was, what off market was, and how to connect with individuals. So I kind of just went in there part-time after my shifts when I was doing. And after a short, 2.5 weeks of doing it, I connected with a real buyer, showed them a property and got my first deal under contract, made myself a few bucks. And I eventually quit my job selling tools by the end of that month in July and started at Alpha full time.
Wow, that's crazy. And you all also are an investor, right?
Yeah, so I 3 years ago, we're approaching 3 years in August. I bought my first four family in Cheshire, Connecticut, and it's been a great experience. And one thing I will say, which Mike could definitely back me up on, is owning real estate is far from passive.
Couldn't agree more. Yeah, you could try to make it as passive you want, and there are different asset classes that can be more passive. For example, like a single tenant triple net lease building, right? Think about your Starbucks or a CVS or perhaps maybe even a gas station, something like that, where the tenant's responsible for all the taxes, for all the insurance, all the maintenance and repairs. But when you start getting into multifamily, uh, you will kind of open up the door to maintenance calls, potentially toilet leaks. And there's, property managers you can hire to kind of mitigate that or, have a buffer. But yeah, it is far from passive, but it's a great wealth building tool. And that's the whole, kind of point of why we do this podcast is we want to teach and kind of share our experiences with the listeners about how to build wealth through real estate, because that's what's so cool. There's so many different avenues. I mean, you guys at Alpha, you guys are vertically integrated. So you guys are raising capital, you're owning property, you're flipping property, you're doing some wholesaling, you're brokeraging. So you have so many different buckets of revenue streams. And that's what, you know, there was a guy I used to work in investment mutual funds, and his name is David Portnoy. He wrote a book. Diversification means always having to say you're sorry. And the premise of that book, and I think you guys kind of, whether you realize it or not, are doing it, is you have all these different buckets, and it's because you want to diversify, right? Not everything is going to work at the same time, and that's okay, right? If you look at someone's portfolio, you have emerging markets, you have small cap equities, you have ETFs, you have little S&P, you have gold, you silver, but like nothing's all going to work at the same time. So, but if you have a little bit of everything, then eventually it'll all kind of average out. And I think that's what you guys are doing so well. And kind of on that topic, you lead Alpha's charge in raising capital, right? If I'm not mistaken.
Yeah.
So, you know, if that's not an easy task. So if someone, you know, listening here wanted to say, I own a couple properties, but I'm running out of money, right? And I want to start raising capital, and I always tell people, like, tell everyone what you're doing. Don't keep it a secret. But if someone was to start raising capital, like from day one, how do you think, what steps should they take to go ahead and do that? Like, what are you guys doing to successfully raise capital?
Well, I think it first and foremost, like you said, right, is getting the word out there, right? When people see what you're doing on a daily basis and seeing that you're having success in what you perfect in, and for us, it's like really the multifamily, they want to learn more about what you're doing, right? Whether, if I'm selling someone a deal, helping someone get a loan, showing someone a property, right? They're using our expertise in order to make, better financial decisions in order to, really achieve in real estate, right? Whether it is, like you said, the passive income or you want to be a full-time active investor. But for us, the way we became so successful in, starting to raise capital is relationships, right? And of course, everyone wants to see the dollar signs and, they want to see a return on investment and whatnot. And you want to get this money quick. And especially, a lot of people don't realize or understand when to ask for the money, right? And people necessarily do it when they have a deal or they're up against a clock or they're in due diligence period. And it's like, you need to do that well before that happens. You need to almost have that capital lined up. So when I'm speaking to our own investors, like, hey, listen, there may not be a deal right now, but if I had something that fit your criteria or that bucket, is it of interest, right? Do you want to jump in on the opportunity? What does the structure look like, right? Every investor is going to be a little bit different, and there may be a monetary value behind that. So if it's like, if I throw in $100,000, like, what does that return look like for the investor? So, having your ducks in a row and having, the proper organization, the marketing materials, deal structuring, right, all come into play. But I really think it starts with the relationships, and use what you have right in front of you, right? Your friends and family. That's where we started, is right, reaching out to the people closest to us, right? Because they have the most confidence in us, that they've seen us grow throughout the years. So starting there with your friends and family, and then eventually it's like a web, right? Referral is the most successful to this day in our business, in any type of business, is referral based, right? You are like, I don't know the exact statistic, but don't quote me on it, but I think maybe at least 10 times more likely that you're going to go into a restaurant with your buddy if somebody else referred you to it, opposed to, going somewhere else, right? Like, oh, John told me that, this place is great. And the same thing works in the capital raising in the real estate game. It was like, if your neighbor wants to list his house, he may ask somebody, or if somebody told him, like, hey, Mike's a great realtor in the West Hartford area, or selling a multifamily in New Britain, there's a higher chance that they're going to come to you and at least pick your brain or interview you for the role, opposed to just going on Google and looking up best realtor near me.
Mm-hmm. Yeah, 100%. You guys have raised millions and millions and millions of dollars in capital, and it's very impressive that you have, zero losses to investors. So that's obviously a testament to you guys' due diligence and analysis. But I would love to know, and I'm sure the listeners would love to know, like, what does that look like? How are you underwriting a deal to obviously, you're underwriting very conservatively, which is great, and it's very prudent. But how does that look? Let's just take if you're either going to flip a property or if it's a buy and hold, you're obviously going to add value. But what is your mindset and thought process about how you're analyzing any deal? It could be a single family, it could be a 20 unit.
Right. I mean, I think either way you're evaluating either of those opportunities there, you're kind of working within the same realm as like, okay, you know, when you first look at a deal, right? People think, a lot of people think, oh, you win the deal when you sell the deal, right? And that's wrong, right? You win the deal when you buy the deal. You have to buy it correctly, right? So it's a matter of looking at every little thing, right? So we have our team go out there, they analyze the actual property. Okay, what are some of the capital expenditures that we need to get done? Where are the rents at versus what the market is calling for? Are those rents achievable? And at the end of the day, who are we looking to flip that deal to? Obviously, if it's a single family, we're looking for the end user there, right? We want to do high end finishes. And depending on what market you're in, that's going to dictate what type of finishes you're going to use, right? You're not going to use the same finishes that you're going to use in an area like Enfield, right? That you would use in Stamford, right? There's going to be two completely different markets, two completely different buyers, price points, finishes, etc. Um, so, like you said, obviously it comes down to conservative underwriting. You're looking at every little detail, every little line item there, and you want to almost over budget, right? Because there are things that you may not see. And Mike, you're an investor yourself. Once you open up a wall, you can't unsee what's there, right? And especially coming down to the municipalities you're working in, like, do you have relationships there? How is the permitting process work? Like, how long is it going to take an inspector to go out there and look at those things? And depending on, you're typically going in on a bridge loan, which I'm sure, your listeners may know, but if not, a bridge loan is a short term, high interest loan that gives you the capital you need in order to perform those renovations or get in and out of the deal quickly, right? So you need to be mindful when you are planning your timeline. Okay, is it feasible to get this deal done, whether it's 6, 9, 12, 18, 24 months? Is it feasible in that timeline and all the fees and holding costs that occur? Is it going to make sense at the end of the day, where the market sits? And obviously, we're going through times right now where the interest rates are kind of all over the place. We've seen them come down this year, over the past week or so. The Fed's met. The news hasn't been that good. Interest rates are going up. World change is going on, right? That's affecting our everyday lives in real estate.
Yeah, 100%. And for all the listeners out there, there's no like one size fits all. It's not, you can run an analysis and say, okay, this property is not, 9% cash on cash, or it's an 8 cap. So it's going to win. It's going to win. No, it's not. That's not necessarily true. There's a million different factors. Do you have good contractors in place? Do you have good partners in place for lending? Like you said, the bridge loans. People, that it adds up. So you want to take your time. Don't rush into any deal, because ultimately we all want to be in this for the long term, and it's not an overnight. You're not going to get rich overnight. Real estate is about
Absolutely
building
not.
wealth. So, what do you think's next for Alpha? I mean, you guys kind of have dipped your toes in a bunch of different buckets. You guys are killing it. What do you see next for the future of Alpha?
No, I appreciate that. And listen, I think our ultimate goal, right, is we want to get to 1 billion under management, 10,000 units. And we know that, we can't do that alone, right? First few years of us acquiring units was with all of our own capital, whether it was deal sourcing for other investors, working with some of the institutional hedge funds who are buying single families in the South, whether it's, in any different one of our verticals there. But we want to expand outside of Connecticut, replicate the mark that we have here in other markets. So we've been actively over the past, 1 to 2 years going out to different markets, in the Carolinas, down south, the Southeast, the Sun Belt, the Midwest, and looking at where are the trends going? Where are people moving? Where are rents aligned? Obviously, um, the states that you're investing into and their laws, also dictate, how quickly or how slow you're going to move and stabilize assets. So we want to continue to grow and buy, large multifamily complexes that we could force the appreciation on, or even look at some more stabilized assets as some of our, investors' appetite increases or decreases. Right? Some people are risk adjusted; they'd rather take a lower return. That's a little bit of a safer route, and maybe that's buying, a large complex, 100 plus units that's built in the mid 2000s that is only giving you a 6% cap rate, maybe, right? Or, there's other deals that people want, like, hey, listen, I'm really ready to roll the ball here and take a chance. Like, let's go out to Texas and get 150 units that's, only 75% occupied and the rents are $300 below market. Let's go in there and fix it up, increase those rents, maybe go in buying at a 5 cap, but stabilizing to a 10% cap rate, right? So that's definitely the trend of where we're looking to grow, is putting this vertical footprint we have in Connecticut and replicating it in all of our other markets. Because what we've come to realize is that, a lot of, these large operators who own billions under management, don't really heavily rely on, third party property management. And we've seen a lot of assets go underwater because of, you keep going to third party because you're not actually in that market. So before we, actually buy something in another state, we want to make sure we have our boots on the ground. We hire the correct people, because without all of us, really there really isn't an alpha, right? Now, there's not one person who could solely do this job. We're a team, we're a family, and that's why, I love what we're building here and what we're doing moving forward.
Yeah, no, that's amazing. Um, for the listeners, if they wanted to invest with you guys, and I'm sure this is deal by deal, but what could someone expect? It's like, hey, Justin, I got 500 grand. I'm a high W-2 earner. I'm too busy. I don't have time to own real estate and manage it and all the kind of bullshit that comes with it. But I'll invest with you guys. What kind of returns could I expect? And what's my time horizon? How liquid or illiquid is my capital?
I mean, tough question to answer, because like you said, every deal is a little bit different. We have a fund model that could pay, upwards of, 15% annually on your money, right? There's other
Hmm.
models that pay out more in a quicker time frame, in like a 12 to 18-month span. So before we even engage with somebody who wants to invest with us, it has to be a right fit, right? The relationship, like I stated earlier, comes first, because, we've worked with people who are phenomenal. The communication is there, they're reading our monthly updates, they're engaging with us, they want to learn more, maybe they want to do a little bit of themselves on top of doing some passive with us. And then we have other people who've wanting to throw money at us, but don't pick up the phone, don't answer an email, try to send them their money back on a wire, they're not answering. And it's like, I have a couple 100,000 of your money here. Are you that well off? I mean, I'll take it, right? Obviously
Right?
not. And there's, a lot of regulations and laws we have to follow, guidelines by the SEC when we are raising capital and whatnot. So I won't divulge a little, more into, some of those returns, but there's obviously a later conversation, that we're able to have on, what those things could look like.
Yeah, no, that's fair, and I know it's very deal by deal, and it's also the investor's risk tolerance, right? And that's where that relationship and those conversations come into play. It's not a one size fits all. No, no,
And I and
totally
I
get that.
believe too, there's some investors who want, more upside and depreciation opposed to cash flow, right? So, like you said, the investor's appetite really comes into play, because if we're presenting an opportunity where, we're able to offer, depreciation and upside on a 5-year plan and whatnot, that's one group of investors compared to the other group of investors. Like, hey, I'm only investing, under 100 grand. Like, maybe it's more of a flip opportunity where, it is a more of a high risk, high reward situation. That fits their bucket. Maybe your immediate need is now, not later. Are you trying to, get rich, right? Or are you trying to build wealth, right? And
Right.
that's where a lot of people need to decide, is it a today play or are we building for the future?
That's exactly right. And for the listeners, there's a lot of ways you can get rich in real estate, and there's a lot of ways you can get wealthy. But and just to name a few, and Justin, you're familiar with both of them. Wholesaling and flipping are ways you can make capital. And I think you and I both do this, but we do it so that we still work our full time jobs, doing agent work, brokering deals, but we're using that capital to then go buy more real estate because at some point you eventually do want to hang it up. And if you're constantly, it's like working a job. If you're constantly flipping or wholesaling, you're only as good as your last deal. But if you're using that money to then go buy multifamily or single families or whatever asset class you want, you're building generational wealth that will eventually, not overnight, but it will spit off, and if you run your numbers right, enough cash flow to eventually become a little bit more passive, and you don't have to be active in the everyday, day-to-day grind. So, for the deals that you're buying and raising capital on, are you doing more syndication, like more syndications, or are you doing more joint ventures, or how are you structuring that?
Typically, we have traditionally have done a bunch of different syndication deals. We work with a few different, high net worth individuals and family offices where, depending on that deal, there we may be open to a co-GP structure, depending on how much they're bringing, how much capital they're bringing to the table, what role they're playing in the transaction. Things of that magnitude. We also opened up a fund where it's strictly passive there. So obviously, the difference between a syndication and a fund, a syndication, you're investing into one specific deal. You know all the details about it. Where it is. How many units it is, so on and so forth. And you're only, like I said, only investing into that one specific deal. The fund structure and the fund model is like, hey, you're putting into this not necessarily blindly, but somewhat blind of like, hey, these are the type of assets we are going out and buying. This is the criteria we are staying in. These are the lines we're playing in. And we're going to buy assets like this, and your money will divulge into multiple buildings, whether that's a 6 unit multifamily or it's a 45 unit building, right? So, in our fund model, we're buying all commercial multifamily real estate. So typically 5+ units up to 100. If we go above 100, there may be a play where we are doing a syndication deal, right? Instead, depending on how much capital we need to raise for those opportunities there.
Yeah, no, it makes complete sense. Um, what what part about real estate gets you up in the morning? What do you like most? Do you like the deal making, going out and finding deals and kind of cold calling sellers and getting something under contract? Do you like more the investor relations and the communication? Or do you like brokering deals? Do you like wholesaling? Like what what do you like the most?
Honestly, that's such a hard question because they all play into each other. And I love all aspects of it. I think I'm a big relationship and communication guy. And that's why I
Hmm.
think I fell into this role because I started at Alpha in the disposition role, moved up to a manager of it, a director, having a team of like 5 individuals below me, and then eventually moving over to the investor relations side because I was going out to different conferences and I was really good at connecting with people. And I believe that so is because I come from a family where both my parents are deaf. I spoke sign languages, call it my first language, call it my second language. But my parents were pretty good. They went to public school. They're very good lip readers. They speak more than I'd say the average deaf person. So communication and relationships have been first and foremost number one to me. And you could attest to this, Mike. Like relationships go a very very long way. Like you don't I never want to do a one deal off trying to make this much money, especially what we say in wholesaling, like, hey, it's I don't want to do one deal with you. I'm not trying to get rich off this one deal. Let's do five, let's do 10 deals together. I think wholesaling was great, obviously starting the career. I find a lot of enjoyment with connecting with investors and selling them deals, finding deals that other people can't, or seeing the value in deals that people can't, right? Because they say most of the best deals are off market, right? But there's still a bunch of great on market deals.
Mm-hmm.
and
100%.
just to paint the picture of relationships. So I used to work at Best Buy back in high school, going into college a little bit, and had a good relationship with this guy. Used to come in, own a few funeral homes actually, and I sold him computers, whatever he needed. Right, I was his go-to guy, and here we are, like 10 years plus later, and I just submitted a accepted offer on a funeral home that was listed on the market, and getting him into a new county that he doesn't have anything in yet. And I just saw it pop up on my feed. I'm like, I think I actually know somebody, and I haven't talked to the guy in quite a long time, but I called him, told him about it. He still remembered me, because I left a little bit of an impression on him, right? I want to
Mm-hmm.
stand out a little bit, and that's how you become successful in this industry. Is, like I said, the referral basis. You leaving an imprint on people, being able to deliver value without keeping your hand out, right? Like I work with a number of investors where I've sold them over 100+ units in the past 6 years of doing this, and they continue to call me and say, "Hey, do you have a guy for this? Do you have a driveway guy? Who's your plumber? Do you have an electrician?" Right? And not putting your hand out there. I believe in good karma. It comes back in return, and I brokered 70+ units for this a couple of these guys, these brothers, in the Bridgeport area, and a couple of years later, who do they call to now list their deals on the market? They called me, because I was always leading with value. We love to under promise and over deliver here at Alpha. And another, staple rule we live by is, we could all take bad news, but nobody likes surprises, right? So being honest, open in that line of communication, delivering that bad news, but trying to be solution oriented goes a long way, because Mike, you've probably been in situations where the deal is, it's ugly sometimes, right? And you get closer to the closing table, and then things start popping up that you have no control over, and it's a very hard conversation that you need to have with your client, but they need to happen because they find out at the closing table, like, things are messed up. Like, it may kill the whole deal, it may kill your relationship, the guy may never want to work with you again.
Yeah, no, it is all relationship. It's just like any business, any business that is has a sales component, or you want to be in for the rest of your life. It's 100% relationship based. So that's really good. Um, you're a busy guy. I always ask this question towards the end of the show or the podcast. What does your day to day look like from the time you wake up to the time you go to bed? Walk me through a day in the life of Justin.
All right, so I'm usually up. I'm an early bird. I'm up at 5
Woo.
a.m. I drag my fiance out of bed, and she's great. She's great, and we head to the gym. I get my routine, and obviously come home, shower, get I usually meal prep, a couple days in advance, so I'll put all my meals together for the day. I'm out the door by right around 7:45, 8 o'clock. Head into the office. Um, Sometimes I'll eat my breakfast in the office, make a coffee, right? Come in, I pop open. I have my email open. I have LinkedIn open. I have my MLS open, and I'm looking. Depending on what it looked like from the day before, right? Whether that's, I need to get some contracts signed. I have a task list of people I need to call, whether that's investors for raising capital, whether that's investors that I'm representing as clients, sellers, what closings looks like. Going throughout the day, obviously I'll have my lunch at some point. I'll come back, do some follow ups. Put together some emails, maybe some newsletters I'm putting out to our investors. Typically, like to stay in contact with them at least. Most operators, they usually update their investors on a quarterly basis. We like to take it a little step further, update them on a monthly basis. So throughout my CRM, I'll make a task list of who I need to, what touch points I need to make, what meetings I have for the day. Usually wrap up around 5 p.m., head back home, in time for dinner. Sometimes I will open up the laptop and get some more work done. In our line of work, there's no shut off, right? Even when we're on
Yes,
vacation,
sir.
sometimes we're still working, right? I always say, hey, listen, like if my phone is ringing and I don't answer, there's potentially I'm losing money, right? So I'm
100%.
answering. Usually me and my fiance have another, Tesla system at home that we're utilizing to stay on track of whether it's we're cleaning the house or, we have laundry to do or working on a new project in the house. Cause when you own a home, it never stops. Right.
Yes,
And
I can
then
attest to that.
usually try to, if I'm a big sports guy, so I'll throw something on TV and wind down, usually try to be in bed for, you know, by 10. It's been later lately. I'm planning a wedding with my fiance right now. We're getting married in a few months. So we've been doing a lot of wedding stuff all night. And that's been, we use the word fun. But no,
Yeah.
it's been a good time. But that's kind of a,
Yeah, no,
a,
it's
you know,
good.
a day in my life, you know,
And
but
that
no,
it's so crazy. I'm sure you can attest to this. I used to work in a W-2 job back in from 2015 to like 2022 before going to real estate full time. And I'd clock in at 8, clock out at 5, and that was great. And actually now, and I'm sure, like I said, you could test this. I actually work almost twice as much as before because again, you don't just stop at 5. You get home, you maybe do some stuff, and then you log back on. I'm always going to answer a call. You're always going to answer a call, but I wouldn't change it for anything. You're building something that's your own, and if you want to go mess around on a Thursday and go play golf, you can do that. You could never do that before. So, we work hard. We love what we do, and the sky's the limit, as they say.
I love
So,
that. I love that.
um,
But
Justin, thank you for coming on the podcast here. If listeners want to find more about you, where can they go? And we'll link everything in the show notes, but just for those listening now.
yeah, no, Mike, I really appreciate you having me on. It was an awesome time. But if listeners want to connect with me, you know, my information is out there. Whether if you want to connect with me on Facebook, LinkedIn, I'll share my information with Mike. I'll share with you my number, my email. Feel free to reach out if you want to just ask me some questions about some of the markets, what we're doing right, what's working for us, what's not working for us. I'm more than happy. I typically always answer my phone unless I'm immediately doing something, but shoot me a text. More than happy to, share some expertise, or if you want to bounce something off me, or you think you have an opportunity for us here at Alpha that we could take down, or you want to work together on something, please reach out at any time.
Awesome. Thank you. And I'm sure we'll golf soon, and we'll definitely talk sooner than that. So thank you again, Justin.
Thanks, Mike. See you on the course.
Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.